Shell is a British multinational oil and gas company headquartered in London, England. Shell is a public limited company with a primary listing on the London Stock Exchange and secondary listings on Euronext Amsterdam and the New York Stock Exchange. Shell was formed in 1907 through the merger of the Royal Dutch Petroleum Company of the Netherlands and the Shell Transport and Trading Company of the United Kingdom, which I will further talk about it later. Shell was one of the seven sisters which dominated the global petroleum industry from the mid-1940s to the mid-1970s. Shell is vertically integrated and is active in every area of the oil and gas industry, including exploration, production, refining, transport, distribution, and marketing. Shell is a constituent of the FTSE 100 index and had a market capitalization of $199 billion on 15 September 2022, the largest of any company listed on LSE and the 44th largest company in the world. By 2021 revenue, Shell is the second largest investor-owned oil company in the world after ExxonMobil, the largest company headquartered in the United Kingdom, and the second largest company headquartered in Europe after Volkswagen, and the 15th largest company in the world until its unification in 2005 as Royal Dutch Shell. The firm operated as a dual-listed company, whereby the British and Dutch companies maintained their legal existence and separate listings but operated as a single unit partnership. From 2005 to 2022, the company had its headquarters in The Hague, its registered office in London, and had two types of shares, A and B. In January 2022, the firm merged the A and B shares, moved its headquarters to London, and changed its legal name to Shell. From 1833 to 1892, from seashells to the world of oil. When Marcus Samuel Sr. died in 1870, he passed the business on to his two sons, Marcus Jr. and Samuel, who began to expand it. In the 1880s, they became particularly interested in the oil exporting business, but shipping still posed a problem as oil was carried in barrels which could leak and take up a lot of space. To solve the problem, they commissioned a fleet of steamers to carry oil in bulk, including the Murex, which in 1892 became the first oil tanker to pass through the Suez Canal.
From year 1893 to year 1900, the Shell Transport and Trading Company is born. Bulk transport substantially cut the cost of oil by enormously increasing the volume that could be carried. The brothers' main competitor at the time was Standard Oil, a company famous for its blue cans of kerosene that, when empty, could be used for anything from roofing to backpans. To stand out, they created the Shell brand and painted their cans bright red. The tactic worked, and by 1896, their kerosene trade was earning more than all their other businesses combined. In 1897, Marcus and Samuel renamed their company the Shell Transport and Trading Company and launched their first refinery at Balikpapan in Dutch Borneo.
From 1901 to 1907, merging with Royal Dutch. In 1907, the decision was taken to merge Shell Transport and Trading Company with Royal Dutch and form the Royal Dutch Shell Group. The day the telegram was received announcing the merger, April 23rd, is now celebrated every year as Shell's birthday. 1908 to 1913, expansion and innovation. The merger with Royal Dutch signaled a period of rapid expansion as Shell opened operations throughout Europe and in many parts of Asia. There was also substantial exploration and production in Russia, Romania, Venezuela, Mexico, and the United States. From 1981 to 2004, growing and facing challenges. In the 1980s, Shell began to grow through acquisitions. In 1986, the oil price collapsed, with the price of a barrel of oil falling from $31 to $10 over the winter. To adjust to the lower oil price, Shell had to focus on developing projects more cheaply. Intensive research led to huge improvements in drilling techniques and the use of 3D seismic technology to search for new oil sources became widespread. These advances enabled the company to develop offshore projects in much more challenging environments. The Troll field in Norway was one example. Another was in the Gulf of Mexico, where a new well was drilled at the depth of 2.3 kilometers. The 1990s saw biomass and gas-to-liquids GTL technologies make giant leaps forward. In 1993, Shell opened the world's first commercial GTL plant in Bintulu, Malaysia, a pioneering step that set the stage for the increasing role this fuel would play over the next decade.
Year 2005 to year 2016, record-breaking innovations and new partnerships. In year 2005, the Royal Dutch Shell Group underwent a major structural reorganization as the nearly century-old partnership between Royal Dutch Petroleum and Shell Transport and Trading was dissolved, and Shell unified its corporate structure under a single new holding company, Royal Dutch Shell plc. Shell's innovation has continued at pace into the 21st century. In 2012, the company completed Pearl GTL in Qatar, the world's largest source of GTL products. In 2016, production started at Shell's Stones Field, the world's deepest oil and gas project. And in 2017, Prelude, the world's biggest floating liquefied natural gas facility, sailed 5,800 kilometers from a shipyard in South Korea to its new home in Western Australia. The company has also continued to expand. In year 2015, Shell announced that it will be buying BG Group, a UK oil and gas production company. The acquisition was completed in February 2016, expanding the company's oil and gas portfolio. And in 2016, Shell created its new energies business to focus on exploring and developing commercial opportunities in renewable energy, such as wind and solar.
Royal Dutch Shell plc.com. This domain was first registered by a former marketing manager for Royal Dutch Shell, Alfred Donovan, and has been used as a site. It avoids being an illegal cyber squatter as long as it is non-commercial, active, and no attempt is made to sell the domain name, as determined by WIPO proceedings. In 2005, Donovan said he will relinquish the site to Shell after it get rid of all the management he deems responsible for its various recent woes. The site has been recognized by several media outlets for its role as an internet leak. In 2008, the Financial Times published an article based on the letter published by Royal Dutch Shell plc.com, which Reuters and the Times also covered shortly thereafter. On 18 October 2006, the site published an article stating that Shell had for some time been supplying information to the Russian government relating to Sakhalin-2. The Russian energy company Gazprom subsequently obtained a 50% stake in the Sakhalin-2 project. Other instances where the site has acted as an internet leak include a 2007 IT outsourcing plan, as well as the 2008 internal memo where CEO Jerome Van Dier expressed disappointment in the company's share price performance. The Gripe site has also been recognized as a source of information regarding Shell by several news sources. In 2006, Fortune Global 500 rankings, in which Royal Dutch Shell placed third, Royal Dutch Shell plc.com was listed alongside Shell.com as a source of information. In 2007, the site was described as a hub of activists and disgruntled former employees. A 2009 article called Royal Dutch Shell plc.com, the world's most effective adversarial website. The site has been described as an open wound for Shell. Now let's talk about the financial outlook for Shell. Its bond rating is AA- by Fitch, announced in 7 December 2022. It's profiting now after a slump in 2021. Working capital is positive all the way, meaning during the loss in 2022, Shell was in a good position to navigate through the downturn as well. Main revenue driver is downstream by selling the oil product, which is about 80% of the revenue. You might be asking whether we can profit in downturn economy, like for example, last year in US oil it's negative. But you would think that whether it is possible for this kind of trend, right, you can make money or not. So today we will have Max here to answer that question. So Max, what do you think about Shell, this company. As we can see earlier, Shell were losing money last year and then I would say they recovered this year. So what can you see about Shell?
On the long-term prospect of Shell, if you were to invest your money in Shell since 1996 when you first start trading, 1996, guess how much your money will worth today? You lose almost half of it, 52% of your money. But if you were to invest 1 year ago, of course you gain 43% over just 1 year in Shell. It's quite volatile, not so predictable. The risk is quite high if you were to invest in individual stock. And the long-term prospect of Shell is the stock actually is downtrend. Alternatively, you can also invest in FTSE 100, which Shell is one of the major component. Okay, the UK index, UK 100, FTSE 100 index. If you were to invest in FTSE 100 since 1984, from the data here, how much your money will worth today? You'll gain more than 581%. That means every 1,000 of money of yours will be more than 5 times more. Okay, so although it is still also quite volatile, okay, if let's say you were to buy and hold for long term. Alternatively, there are another option which is safer, which will incur no more than 24% maximum risk, and your returns will be higher in shorter term, which is you can capture the shorter term profit by trading it. Okay, short term. For the past 2 years, your gain from the data here is at least 45%.
Okay, thank you, Max, for explaining. So what Max said is that by using the quant algorithm that has been developed by Max himself, like for the past 2 years, although Shell is not looking good on paper, on the share price and everything, and perhaps like what Max shared earlier, perhaps I think for the past 1 year the investor will be able to earn is because it's so-called undervalued 1 year ago, right? Is that the right way to say it?
Yeah, I would say undervalue or not, it depends on how you define undervalue. So when you think that the value is actually, the long-term prospect is actually up on the upside, and now the price temporary down, then this is undervalued. But when you look at the long-term prospect, if it's on a downtrend, then I wouldn't call it undervalued. So in fact, I would say you might overvalue it already. If let's say you were to buy it now, or if it's in a downtrend.
Okay. So since 1997, seems like there's a huge drop, and then it sort of linger around this line for quite some time, right?
Since 1997.
Yeah, perhaps you can explain to us why would this happen, and what should investors look out for when these kind of things happen?
In fact, at that time, the prospect is not that good. Of course, they also have stock split, which if let's say you were to buy physical stock, okay, the real stock, holding the real stock, then you might get more stocks even when they have stock split. But if you were to trade the contract, then you might suffer some losses from there. Even you take it into account of the stock split, you might still incur some losses. Okay, if you were to hold from 1997 all the way until now, which is 1997, it's almost more than 20 years. Yeah, 25 years around here.
So am I right to say, therefore, you think that the investors to diversify their, maybe not diversify, to manage their risk, right? It will be better that they invest in UK 100.
If you were to invest in the index itself, it already help you to diversify to 50 largest stocks in UK. Of course, another way to do it safely or safer will be you capture shorter term profit, you don't hold that long term. Then you reduce the risk from the data I can see here. If you were to do it for the past 2 years using one of the quant algorithm we developed have more than 45% gain on 2 years time with risk not more than 24%, maximum risk not more than 25%.
Okay, so it would be good if you look at a comparison, right? If you look at 5 years. Okay, so let's say if the investor that invested 2 years ago, like January 2020, which is about 2,248, right? So they'll be still winning some of the money. Slightly winning. Okay, so let's say the investor had invested their money like early January of 2020.
Less than 5%.
Yeah, until now they should earn less than 5%. But of course, they have to go through this roller coaster, right? Where they drop
more than almost half.
Yeah.
More than half of your money as well.
Yeah. So basically, by looking at this chart, right, if the investor had invested their money on early January 2020, and then they have to go through this roller coaster that they might lose half of their money at the point of time,
and then recover back to recover their money over 2 years time.
Yeah, so these 2 years time they will still be just recovering the money, right? And then perhaps earn a little bit percentage.
Yes.
But then by using your software during this turbulent moment, investors are able to actually generate 45% of profits.
Of course, if you were to do it manually also can, if you're very good in this, then you might be able to capture short-term profit as well. But just that you need to spend the time to do this in front of computer and to do this. If you were to automate this, then of course you save yourself time.
So basically, you can live your life.
You save yourself a lot of time.
Yeah, you can live your life and earn money at the same time. That's what Max wanted to develop this algorithm at the first place, like before.
So save time, save life. Because all of us, no matter how rich or how poor you are, our time is the same. We have the same scarce resources, which is time.
So what Max is saying here is that you can use shorter time to generate more value, therefore more money for yourself.
Of course, there are some risks. You still have to learn. Good things in life may never be so that easy. You still need to learn how to do this. That means you need to learn more about investment so that you know how to do your money management. Even though you have a very powerful strategy or system to help you, you still need to master the money management and risk management.
Okay, so when it comes to this, Max does have a webinar, how to invest and trade multi-assets in any economy, be it upturn, downturn kind of economy. If you're interested, please click in the link down below in the description so you can learn more from Max, like how to manage your money, how to grow your money, especially in turbulent times like this. Thank you so much for watching. That's all from us. We will see you next time.
See you.